How to protect your money during an inflation. Hi there, it's Luigi, and welcome to Catapult Capitalism, your guide in making smart financial moves for your future. If you enjoy watching our videos, feel free to like, subscribe, and hit that notification bell so you get updated whenever we upload a new video. In this video, we are going to share with you some tips on how to protect your money during inflation. So if you dig these kinds of videos, then keep on watching. With inflation rates growing at a speed not seen in decades, many people are wondering how to avoid having their savings and spending habits severely impacted by rising costs. Prices for consumer goods and services such as food, electricity, and housing have been rising in recent months. This year has seen growing costs, supply chain bottlenecks, and increased consumer demand, all of which can pose substantial issues as the typical American's purchasing power deteriorates over time. It is natural to be concerned about your assets during times of inflation, no matter where you are in your working or retirement life. While some economic trends may prompt the ordinary individual to exercise caution when it comes to spending, it's a different story when you're wondering if the money you're saving and investing is losing value. While the impacts of inflation cannot be prevented, numerous financial experts state that customers may take efforts to mitigate the worst effects. Review your personal budget. Examine your personal financial spending to find methods to cut costs. Consider refinancing loans, debt consolidation for cheaper interest rates, and debt repayment. Furthermore, investing in oneself via professional marketability through continuing education can lead to higher revenue through new company endeavors or supplemental income. Invest in irreplaceable items. When inflation strikes, the secret to success is to invest in items that cannot be easily replicated. Consider land and real estate, as well as rare objects such as collector's edition baseball cards. Because they are difficult to replicate, all of these perform exceptionally well during periods of severe inflation. Examine your asset allocation. In times of rising inflation, it is prudent to consult with an advisor to verify that your investment portfolio is appropriate for your risk tolerance. As an example, assume a modest asset allocation of 60% stocks and 40% fixed income. Consider allocating a part of your portfolio to dividend-paying equities if you are looking for income. Stocks have historically outperformed bonds in terms of inflation resistance. Create a mix of investments. Inflation is just one factor to consider when adjusting a portfolio. For investors, diversifying across several different types of assets to help withstand a volatile stock market period is essential. It's best to create a mix of investments that differ from each other to keep up with rising prices. Consider short and medium-term fixed accounts. When signals of inflation appear and you want to safeguard your retirement assets and weather a coming recession, short-term and mid-term fixed accounts such as 2 to 5 year fixed annuities are a good choice. Money market accounts and bank CDs provide little to no guaranteed rates. However, a short to mid-term annuity can provide up to 3% fixed returns at current rates. Maintain a rainy day fund. When prices rise, it might be tempting to look for investments that will keep up with inflation. However, before deciding where to invest, experts advise saving aside enough cash to cover any immediate financial needs. As obvious as it may appear, less than half of all Americans have enough funds to cover a $1,000 emergency bill. Increase your earnings. The unemployment rate has virtually returned to pre-crisis levels, and many firms are having difficulty hiring. While it may be difficult to improve your compensation overnight, employees in today's employment market are better positioned to shop their skills elsewhere or bargain for higher pay. There are also several side jobs that have a flexible schedule or may be done from home. Outside of your 9-to-5 job, you may perform pet sitting, online teaching, or driving for a ride-sharing service. You might be able to locate freelance employment on sites like Upwork or FlexJobs. Although there aren't always quick or easy ways to improve your income, there are ways to make more money to pay more pressing expenditures. Become a sale shopper. When it comes to necessities, now is the time to get serious about being a deal hunter. This does not imply that you should become an obsessive couponer, but rather, you should pay greater attention to discounts and let them drive where and when you purchase. Reconsider large expenses. Consider how inflation may affect the prices of significant projects or purchases such as house improvements, and whether any price increases are expected to be short-term or long-term. Lumber prices, for example, rose as a result of the supply chain and other challenges caused by the outbreak, but prices are already beginning to fall from recent all-time highs. Recognizing that these price hikes may be transitory, you may postpone replacing your wood flooring, for example, until costs have returned to normal. If you hear rumblings of inventory shortages in regions where you want to spend, either act promptly or begin saving money to offset any price increases. Find ways to keep costs low. If you haven't reviewed your budget in a while, now is an excellent time. You may have subscribed to various streaming services during the epidemic that you no longer use. Or you may be spending more money dining out or paying for additional convenience services today. Let's go through cutting costs in some specific areas. Food. The increase in food prices represented a 14.2% increase in the cost of meat, poultry, fish, and eggs over the previous year. Take advantage of any specials to fill your freezer and pantry to help keep your food budget under control. According to Bert Flickinger III, Managing Director of Strategic Resource Group, a retailing consulting firm, you may also save greatly by staying with warehouse clubs and discount retailers like Costco and Trader Joe's, as well as private label items. Another method is to scour drugstores and convenience stores for food deals. Some retailers are extending their fresh food selection and may provide lower pricing than traditional stores. Energy. Retail gasoline prices rose 4.1% in May after plummeting 6.1% in April. Gasoline prices have surged 48.7% in the last year. Prices have risen due to increased demand, but manufacturing in the United States has yet to completely recover following steep cuts during the pandemic. Other concerns include supply chain constraints and interruptions caused by the Ukraine conflict. Gas prices have recently reached a new high of $4.99 per gallon. If you're going on a road trip this summer, attempt to fuel up in areas with cheaper gas taxes. You may also get more miles out of your tank of petrol by driving smoothly, staying within speed limits, and removing your roof rack, which can cause drag. Making your house more energy efficient can help you save money while also helping to reduce pollution too. All of those appliances and light bulbs may appear tiny, but they add up. Saving electricity at home reduces your household's energy consumption, which in turn reduces the demand for harmful fossil fuels. Cars. Increased car prices stem from high inflation rates. As a result, you'll have to spend more money on an automobile. Once acquired, you must spend money on gasoline and servicing maintenance, among other things. New automobile and truck prices have risen 12.6% in the last year, owing to pandemic-related parts shortages and even production shutdowns. Used car prices have risen 16.1% too. Given the scarcity of available vehicles, purchasers should temper their expectations, even though a few models still provide typical incentives. In today's market, customers should search for a reasonable price rather than a terrific deal, says Jeff Bartlett, Consumer Reports Automobiles Managing Editor. Big discounts are a thing of the past. With so few automobiles on dealership lots, the supply-demand equation benefits the seller. Well, there is one silver lining for new vehicle buyers. If you have a car to trade in, higher used car values have made it worth more than you may expect. However, customers should be mindful that while they may receive a greater than expected value for a trade-in vehicle, such benefits may be offset by the higher price of a replacement vehicle. If you need money, selling a used automobile that doesn't need to be replaced is a good option. There has never been a better moment to sell an additional automobile that you may not need. A late-model second-hand automobile in good condition may fetch a price comparable to what it cost when brand new. And that's it for this video. If you enjoyed it, don't forget to like, subscribe, and hit that notification icon. Thank you so much for tuning in to Catapult Capitalism, and we'll see you later.